All right, home buyers, your time is coming. In this video, I'm going to talk about the upcoming buyer season in real estate, what I called 4 to 6 weeks ago, what I'm already seeing, and what you can expect to see in most markets. Stay tuned. All right, Matt Gouget, Matt the Mortgage Guy, powered by You Mortgage, licensed in 48 states. To connect with me and my team and get yourself pre-approved and get yourself ready to buy when opportunity presents itself, go to greatmortgagebroker.com. We're more than happy to help. In this video, I'm going to talk about something that I've been talking about with a lot of different clients, a lot of different people who I know on the real estate investing side. I started to see the cracks in June. July, they really started to present themselves. And now in August, it's a daily occurrence. An offer that went in on something that was on the market for 8 days and the buyer got laughed out of the building. All of a sudden, seller comes back and says, you know what? We've been on the market for 23 days. Let's talk. Okay, so as most of us who are involved in real estate, if you're a buyer, if you're an investor, if you work on the mortgage or real estate side, this year was extraordinary in a lot of ways. With little to no inventory, even with demand pushed down, it was rather hard on the buy side. You were up against 6, 8, 10 offers, especially if you're at the entry level. And through March, April, May, it was tough. You know, I had buyers that just got frustrated. They couldn't get an offer accepted. And they thought to themselves, like, man, there's really that many people out here that, you know, don't mind a 6.5% interest rate and are willing to pay $560 for something that was listed at $525. Well, I started to see buyers back off. I started to see sellers have a little bit too much confidence and list at unrealistic prices. And around June, when things started to change, not all parties get the memo at the same time. I could feel it because I was having conversations every day. And here's what I want to say to buyers. Your time is coming. For some of my buyers, it's already come. And we've already got deals that have been renegotiated, originally listed at $750. My buyers came in and offered $625, which felt offensive to the seller. They were overpriced, but probably not by that much. Seller on that one, I think, countered at $700. Long story short, a little bit of back and forth. We were too far apart 4 weeks ago. Now, agent gets a call a couple days ago. Let's talk, right? The sellers are going to have reasons that they need to sell, right? And that's a great position to be in as a buyer. As somebody who works with solely buyers, I don't have any real vested interest on the sell side. I can tell you it's an exciting time for me. October of last year is when we saw rates shoot to 7.5. For a lot of buyers, this is demotivating. This is something that gets them upset. I would tell you as a buyer, you might want to rethink it. It might be what's needed to get some of the sideline buyers off of, you know, the fence on the other side, that they're just going to wait. And then you'll be in a position where you're the prize at the dance, right? You're the one still looking to buy, and seller's going to have to play ball with you. So October of last year, rates were up in the 7.5 range, and October, November, December, a lot of deals were had, a lot of seller credits, a lot of price reductions. This year, we've got rates up to 7.5 in August. So I think that those price reductions, those seller concessions, the leverage shifting to the buy side is happening earlier here in 2023. That's what I see from my seat with my clients and the agents I speak to. So what can you do if you're a buyer? If you're a buyer, stay tuned. watch the markets you're interested in buying in. Look at things that have been on the market. It's easy enough. You don't have to be a real estate agent or professional to use some of these sites like Redfin and just have a parameter that says listed more than 21 days, listed more than 30 days. Those are going to be the sellers that either A, come to the conclusion that they need to lower their price, offer some seller concessions, and need to sell, or maybe B, are unrealistic and just, trust me, those ones are out there as well. But nonetheless, if you're in the game, if you're looking at the market, if you're putting in offers, if you're negotiating, you've got a chance to score a really good deal, whether that's your primary residence or whether that's an investment property. Both of those things are, going to find more and more leverage on the buy side. And so I'm excited about Q3 and Q4 of 2023. If you're a buyer and all this talk about mortgage interest rates going up has got you down, trust me, it's going to help you. It's going to help you get more and more leverage. The more demand that falls off, the more desperate, honestly, sellers are going to get. So quick message to sellers out there or agents working with sellers: make sure that you understand the dynamics of the real estate market. It changes quicker than most people think. It's also got a lot of seasonality built in. When you see month over month gains, January through June, and then month over month declines, July through December, know that that happens every single year. Those could be even more pronounced in years like these last 2 years we've seen, with the interest rate dynamics that also plays into how much demand there is and also plays into how much somebody can afford to pay. So my advice to everybody out there: make sure you're plugged in. Make sure you're working with a high-level real estate agent, a high-level mortgage broker who can really help guide you in a market like this, where you've got seller concessions and you've got a little bit of leverage. That gives you the power to structure a mortgage that makes sense for you. So the best agents who I work with, we work very close, and we say, you know what, on this deal, let's offer $685,000, $15,000 in seller credit. What we're going to do with that credit is we're going to do a 1.0 buy down. We're also going to pay for some of the closing costs, whatever the case may be. Doing that sets the client up for success. Strategize a little bit around how you're going to structure the best deal for them, and the markets where you've got some leverage, you get to write more of the terms. Hopefully this helped. Again, if you want to connect me and my team, go to greatmortgagebroker.com. Have a great day. Until next time, we gonna see.